shining star. No matter who you are, shine bright to see.
Thomas, my friend, that song means we're back and we've got a rising star.
Yeah, I'm excited about this. We are going back to a new format on Tasty where probably once a month, I believe, we are going to introduce you to a new rising star. Since we're still in the pandemic, Anoop, we just even though we love to have everybody in the studio, we decided to bring back rising stars once a month, and you're leading the charge 2021. So welcome to the show, and welcome to Tasty. And how are you doing today?
I am doing very good, and I'm very excited to be on the show. A couple of years ago, when I saw Rising Star, one of the episode, I thought maybe I could be there, but that was too far-fetched, and now I'm here.
Well, let's put up a little bit of your bio here before we get started, just so everybody can take a quick little look. So grew up in India outside Mumbai. We talked about this yesterday, and when you and I just had a brief chat, and I was like, you know, you went from one of the warmest places in the world to, as you said, getting dropped off at O'Hare, and it's about 20 below. But you got your master's degree in computer engineering from IIT. We did a show in the last 2 years ago in the brand new IIT Entrepreneurial Center. It was fantastic, really beautiful place. And now you live in Minnesota. And but here's the interesting thing. You told me you started trading when you were 17 years old. Your dad gave you a little bit of money to trade, and the Indian markets are not easy. And so I can only imagine what that was, what you were going through. Now, many years later, you and I actually met going back to, I think you said about 2009, back when we had Thinkorswim, and at some event we did. But you kind of rediscovered us in 2018, found Tasty, and really started getting into options the first time, became a full-time trader and quit your job as an engineer. So you have been surviving. You are one of the survivors and one of the successful traders. And it's great. You know, you're using the strategies and you're making a full-time profession of it. Congratulations. And now we want to listen to you. Tell us about that crazy journey from engineer and retail investor to saying, hey, I want to go for it. Let's talk about that.
Well, one thing I remember last year you said, if you could survive this drop during the pandemic, you could survive anything. And I survived that one. So that's when my confidence just boosted so much that I can survive pretty much anything.
When you were working full-time as an engineer and you were just trading, I assume you were more of like a long-term investor who may have just been dabbling in some derivative products. Is that pretty much fair?
That is correct. And I was trying everything. I mean, the financial markets fascinated me so much that I wanted to learn everything, but I just happened to be in IT profession. So I was trading on the side, and then I was learning options. I was learning different charting, Fibonacci, wave theory, and whatnot. But I would make money, and then I would lose money. And the cycle would keep on repeating. And I just couldn't understand, why can't I figure out how to make money consistently? And this was happening during the time I was working. And then even in 2011, I tried for 3 months trading full-time, and I was trading E-mini futures and did not work out for me. And then I shifted my focus into building my real estate portfolio, and I started acquiring property. The timing was good. And then when I did that in 2017, I was ready to come back to options again.
So when you were ready to come back to options and you found Tasty and everything else, so how did you start out? Like, what were what was the game plan? Tell us, walk us through the strategies, like walk us through the strategies that turned the corner for you.
So initially in 2017, I thought picking up penny in front of the steamroller was the strategy that I'm going to live with.
Okay.
And that didn't last too long until end of 2018. And that's when I had to figure out that how to make it work. And that's when I really started watching Tasty Trade. And the main thing was, before I would take a position and then I would sit with it until it expires and maybe roll when it expires. But I didn't understand the concept of managing a position while you are in the position. That's what I got out of it. And now I am discovering different kind of adjustment that I can do while the position is on that would reduce my loss or increase the potential for profit.
How often do you trade now?
Oh, I have more than 70 or 80 trades total going on at any time, which I adjust over 4 or 5 times over a couple of months. So I'm trading maybe like 80 or 100 trades a day.
That's great.
Including that.
Yeah. And are you using all the products available? Like, are you using, options, stocks, indexes, ETFs, futures options? Have you incorporated everything?
I am pretty much using everything. I stopped using oil futures after last year.
We understand.
Thankfully, I was in a spread, not naked completely, but still I lost significant amount of money. So I'm not using oil futures anymore. Mainly I use index, and I have some positions on all the indexes all the time.
Got it. And then let's talk about those positions. Tell us what, what are your go-to strategies? Give us details about, your go-to strategies that's kept you, ahead of the game, being able to support yourself, do everything. I want to hear more. Like, what do you, if you find an underlying, how important is IV rank? How important is volume and volatility? How important is the strategy that you select?
So whenever I see high volatility, anything over 100, like in the meme stocks, I do double diagonals on them.
Okay.
But when I see a stock going down for a few weeks, I would just do a put diagonal on that. If a stock is on tear going up, I would do a call diagonal on that. I haven't had much success with the call diagonal in last couple of years because of everything going up all the time.
Going too far. Everything going too far.
Right, too far.
So just so people understand, a double diagonal, because we don't talk about them a lot in this show, but that's when you sell a front, it's like a strangle swap. So you sell a front month strangle and you buy a back month strangle. But the strikes are different.
Yeah, so I sell a straddle actually on the front month or the front week even.
Okay.
And then I would buy out of the money strangle to protect my position. And then every week I would roll to collect more premium and adjust the strike.
Yeah, we call that a straddle strangle swap. And so it's a little different than a double diagonal. It's like a straddle strangle swap where you sell a front month straddle I don't care what week it is, and then you buy back month strangle. And then you'll eventually, as soon as the underlying moves, you'll adjust the straddle strikes, right?
That is correct.
Got it.
And it uses less buying power that way than just doing a straddle straight forward.
Exactly.
Yeah, and sometimes it doesn't work out at the end result, but most of the time it does.
Mm-hmm.
What have you found is the most successful? That's just so you know, that's a very high probability strategy. It's limited to what you can make, but it's a very high probability strategy. You'll have a lot of wins. What have you found are the most successful underlyings to use?
So my index holdings that I have, I would have SPY. And for every 30 to 70 shares of SPY, I would have a strangle around it, around 20 delta. While SPY is riding up, that strangle would keep on losing value over the time. And every 21 days remaining, I would just move it to the next month. Eventually, the premium from those strangles build up enough that even if a stock was to move too much, it would still give me cushion. Essentially, what I'm trying to do is dampen out the movement in the stock. So when something nosedives, I don't get affected so much. And if something goes up, I may not make so much money at that time, but eventually the premium would catch up to make that money for me.
What's funny is that you're not alone in the fact that you come from an engineering background. A big portion of a majority of Tasty clients over the years have come from different engineering backgrounds. You told me your background was in hardware engineering initially. Right. I'm curious, like the challenges you found in a very efficient listed marketplace, learning all the stuff that you've been learning. Have you found that as challenging as learning, as the entire master's project for, for in engineering? Like, can you compare the two as far as a learning experience goes?
Well, the learning has been a lot, but the learning is not so much in the strategies or what you do. My main learning had to happen in the temperament of a trader. So like how you trade, how you handle the risk, how you manage the risk. Those were the main things for me to learn. I even if I thought I was comfortable taking the risk, I was actually not comfortable taking the risk when it comes to losing that money. So that was the biggest learning that happened for me. And if I was to compare it with my master's, there is no comparison. That learning doesn't happen for everyone. I feel I'm fortunate enough to have that learning.
Have you found that through that experience, because I know how, obviously we know how difficult it is, through that experience, have you found that it's impacted other aspects of your entrepreneurial kind of lifestyle because now you're self-employed, now you're doing things on your own? Has it changed the way you think through things, you process risk? Has it changed the way, you're still an active real estate investor? Does it change the way that you think about real estate trades and investments?
Not so much. In the sense, I have always been this way, where I would make up my mind and I would just go for it. I mean, I have tried trading the paper accounts in the past when I didn't have any money. I would not be able to trade paper accounts. As soon as I put money into the account, I would be up and running and I would be thinking about those trades. So if I have a stake in the game, I'm going to go after it. So I have always been like that.
Have you tried a lot of undefined risk trades where you've incorporated some unlimited risk positions? The diagonals have limited risk. Have you tried undefined risk positions?
On smaller stocks, I do try those, and I use the same mechanics as you suggest, where you whatever delta you start, and then when your delta starts moving, you adjust your delta, and then when the time comes at 21 days, you just roll out in time and collect more premium and adjust the strikes. So on smaller products, I do that. On bigger products, I have tried doing that, and I'm still not able to handle that risk on bigger products. Like anything beyond $200, I'm not doing that. I would do that under $100 product.
I got it. So I have another question about strategy, which is, when you are doing your go-to is kind of, diagonals on the, and it sounds like most of the ones that are more successful to you are put diagonals and straddle strangle swaps. When you do those kind of trades, how do you adjust diagonals? Because my biggest issue with diagonals is I don't seem to do a great job adjusting them. As I find them more difficult to adjust than like a strangle or something. So how do you typically adjust diagonals?
So to begin with, I start at 60 delta short near term and 50 delta long put longer term.
Okay.
So and that gives me maybe $5 to $10 wide spread. So I adjust on two occasions, either on the movement or on the time. So let's say the shorter duration comes to 21 days, I would adjust and roll out in time to the next month. But if the stock moves right away after taking a position, I would adjust the short strike, go down further into the last month that I had purchased, and reduce my risk there and collect enough premium that even if the stock was to go down, I would be break even. That's the core strategy I'm using, and that I just keep on repeating over and over.
Are these mostly equities, or are they also ETFs and indexes?
They are ETFs, they are equities, everything. Anything that comes down for a few weeks, I would take a position in that, and then just hope for the best.
Yeah. I mean, go ahead, Tony.
No, what else can you do? But after you place the position, is hope for the best. I think you get some success from the put diagonals because of the premium expanding in the back when you get a directional move that you need to the downside. And I think that's why you're finding a harder time doing the call diagonals. And I think if you tweak that ever so slightly and maybe make them like a wide broken wing butterfly or even a ratio spread on the call side, you might find a little bit more success with that. That's something food for thought.
Definitely. I'll look into it.
Sure.
So if I take a put diagonal, I would only take it if the stock has been going down for a few days. Anything going up on a tear, I wouldn't initiate a put diagonal. Or I wouldn't initiate a call diagonal if something is going down already. If something is going up like completely insanely, that's when I would initiate that.
Yep.
Anup, I want to ask you, because a lot of people, Tony and I get this question all the time, and you've actually done it. How hard was the decision? I mean, obviously at some point you felt like you had a pretty good handle on things, but how hard was the decision to make, because you have a family and everything else, to go from leaving your full-time job to becoming leaving a job as a full-time engineer to becoming a full-time trader? And how hard was that decision for you to make personally? I mean, Tony and I have both made that decision, but I'm curious what it was like for you.
It was incredibly hard not knowing if I would be able to be successful or not. But my wife supported me because she said, go ahead, try it out for a year and decide what happens at that time. And when I started, 2019 was very mediocre year for me. I was up maybe 7 or 10%. And then 2020 started. I was doing okay up to February. And then the whole hell broke loose.
Yeah.
And I remember in the March of 2020, I was thinking, what did I just do with my life? And I am going to have to work 10 more years again in the same job probably. And that came in front of me, but just kept chugging along with the positions, kept managing those, kept adjusting those. And I got rewarded for it. I ended year with a 20 to 30% up on different accounts.
Yeah, that's wonderful. And you've been able to keep that pace going in 2021, which is remarkable because we've had kind of declining volatility. You've had to survive the meme stocks this year and everything else, but it's wonderful. It's 8:25 in the morning, so Tony and I have to make the
opening bell.
But Anup, it was great to meet you again, even though I know it was almost 12 years ago that we met the first time. But it was great to have you on here as a rising star. Every month, we're going to be telling new stories with new rising stars, and we're excited to introduce a lot of new people to the Tasty audience. And your story is great because you've done something that a lot of people want to be able to do, and I think it's inspiring. So, continued good luck and success, and take care. Stay safe.
Well, thank you so much. A pleasure to be here. Maybe someday I can come to Chicago and meet you guys.
Oh, we would
love to have you.
Love to have you.
Lunch is on, Tom. Come on down anytime you want. Thanks so much, and appreciate your time.
Okay. Thank
We're
you,
going to take a
Tony.
quick 90-second break. We're going to come back. We've got more Tasty opening bell.
Follow us on Tasty Trade for even more dings.
I like the ding.